Hello everybody and welcome to the midweek market update from Smack the Markets for the 19th of February. So the coronavirus continues to be the main driver of market sentiment at the moment, with traders trying to sort of judge between bullish earnings and strong economies in certain parts of the world like the US compared to the potential sort of impact and the longevity of the impact that the coronavirus may well have on company earnings coming through in 2020. We've certainly had quite a shock with Apple announcing that the coronavirus is responsible for lower iPhone production and also the impact on revenue streams that may well have. So let's take a look at how the markets have fared that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. Now, on Monday, we were looking at the most, in particular, on the Dow here, this level at 29,300. So if we take a look at this again, we said on Monday that if the market remained above this 29,300, our bias was going to be bullish. If it broke underneath 29,300, we were looking for a continued retracement, possibly down here to close or test the next level trading window, which is down here around the 29.20 to 29,000. Now we can see what happened. The market did break underneath 29,300. We took a run for the short side, but the market didn't actually make it down here to close this trading window. At the moment, the market is just sitting nicely underneath 29,300. Now, the US stock markets have certainly been extremely resilient through this over recent months, and these markets are pushing on to all-time highs continuously through this year. So 29,300 on the Dow futures contract continues to be, and this just supports the strength of sort of technical reaction around this price point. So it's a key decision point level. If the market rolls over from here, we've clearly got resistance at this price point. So if it rolls over from here, then I think we're going to be seeing possibly reruns and possible retests down here towards the lower end of this trading window. Or if the market can get above this 29,300, we may well start to see a push up here towards 29,500, which is up towards the sort of top end of this range in the midterm. So our trading is very much sort of centered around this key decision point in price action. If we take a look at gold now on Monday, we were looking at opportunities here once the market got above the 158 level. We've been talking about this 158 level now for, well, quite some time. And the market now, it got above this level on Monday, and we were waiting for the sort of pullback and looking for sort of positioning. Now, the market's now rallied on quite nicely. It's up to some really sort of quite key levels on this market. So if we take a look at this on the daily, you can see the market's had a very good run. It's certainly coming up to some sort of historic levels around that sort of 160 area. So we're not looking at any new positioning here on gold. And if anything, for any new positions, we'd be waiting for sort of retracements and looking at buying opportunities when the market comes back into value areas. Now, the other one that we discussed on Monday was Kiwi dollar. And if we recall, what we were looking for was this sort of daily trend to continue. The market was sort of just underneath this sort of 64.50 area. We're looking for the market to come down and close this sort of trading window. That's now done that. The actual sort of technical sort of setup was looking much better here on the 4-hour chart. And you can see, I think this was actually Tuesday, that actually the market continued to break and come down and close this trading window. So at the moment, the move has now sort of played out nicely on this market, and we'll sort of look for waiting to see how this now sort of calms down here, and before we start to look for new positioning on Kiwi dollar. So looking at new opportunities going into the second half of the week, on sort of Gold, we're certainly looking for more retracement areas for those markets. Platinum is looking particularly strong today, so we're liking platinum at the moment as well. And some of the others are some of these CAD markets, so CAD yen and CAD Swiss. Those have got the strengths and weaknesses in their balance in their favor today, and these markets are sort of moving on quite nicely. So if we take a look at the likes of CAD yen, the market here has broken above the key 74 level. We've got a bit of another level in here around sort of 74.40. As we can see on the daily chart, there's still some distance to go there. And then above that, there is another trading window up here towards that sort of 74.80 area too. So we're looking at, again, new opportunities on these markets. These sort of CAD markets, CAD yen, CAD Swiss, they're trending very nicely, as we can see on the mid time frames here, but also trending very nicely on lower time frames too, which are generally tend to be the ones that we like to get sort of positioning on. So there's a few markets there that we're keeping a close eye on for trading opportunities going into the second half of this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.